It's now time for Your Money. We're joined by James Nelson, financial advisor at NelsonCorp Wealth Management. Welcome back, James.
Thank you.
Financial markets are now more than a year into the recovery from the pandemic-induced panic last spring. At what point can we consider things to be back to normal?
Yeah, certainly things have been pretty good recently. We had a nice recovery last year, off to a solid start the first half of this year. And yeah, it does look like we're kind of getting back to normal. Volatility's way down. Bonds have actually rebounded to where they were in 2019. And the economic growth and activity has rebounded back to almost 2019 levels in some cases. So yeah, I mean, if 2019 is kind of the benchmark, we're getting close, and we're definitely there in some cases. There are a few hurdles, though, that I think we're going to have to get through in the near term to officially say that we've gotten back to normal.
Okay, so what are some of those hurdles that we need to see cleared?
Yeah, liquidity is the big one. So liquidity has driven this recovery, and liquidity, oftentimes it's talked about, but we don't really stop and think about what that actually means. Liquidity makes it easier for participants in the economy to own and transact financial assets. That's really what it comes down to. And the Fed has done a great job as far as stimulating the economy and making liquidity available. Lower interest rates have certainly helped with that. And I think we've got a chart here that illustrates what I'm kind of talking about. This is M2 money supply. This is essentially a measure of cash-like funds in the economy that can be used to quickly convert into other assets like buying goods, services, stocks, and bonds. So we see this big spike here last March. In recent months, it's receded a little bit, less liquidity being added. The big hurdle is to see how this plays out when the Fed eventually steps away. What does that mean for liquidity and the overall, comfort as far as we've received in the economy so far?
Okay, so what clues would we have that maybe things aren't as solid as we thought?
Yeah, so we've kind of got a roadmap for this. We've seen this play out before. Back in 2008, 2009, the Great Recession, the Fed came in again with all of this liquidity, the quantitative easing of buying government bonds. They tried to phase that out in 2010, 2011, and 2012 with similar results. The markets got volatile and things weren't quite as rosy as we thought. So the big hurdle here is to see what the markets look like, what the economy looks like when that Fed intervention kind of subsides and eventually probably goes away.
All right, James, some great advice. Thanks for joining us.